We're off. Welcome to the inaugural episode of New Foundations, a podcast brought to you by Acropolis, which is building the first comprehensive treasury management solution for the Bitcoin age. I'm your co-host, Joe Yanni.
And I'll be your co-host, Bobby Shell.
The format of the show we'll be doing weekly, and after the Bitcoin conference in Nashville, we'll start dropping them on Thursdays. There will be a third co-host with us every week. There'll be a rotating member from the Early Riders team. Early Riders is an investment company known for launching the first Bitcoin-denominated investment fund. And then we'll have a fourth member rounding out the discussion, which will just be a guest every week. So, with that, Bobby, before I jump into why the world needs another podcast, New Foundations, and why we're launching Acropolis, wanted to give you a chance, introduce yourself to the audience. It's an honor to co-host this with you. You've built up quite a brand over the last few years. You've really separated yourself as an expert when it comes to the intersection of Bitcoin and SMBs, small and medium-sized businesses. So with that, take it away.
Yeah, so a little about my background. I grew up in a family of entrepreneurs. My father, his dad, owned a small fencing business, and my dad cut his teeth at a young age learning about business doing that and owning his own lawn care company as a kid. So naturally at the age of 11, my dad helped me do that. And before Excel, the first thing my father had me do was lay out a sheet of paper, and once I earned my first check, breaking it out, 10% to tithe, 30% to saving, 30% to the business, and so on. And I got to learn about how to allocate capital so that I can sustain my business. So from a very young age, got to do that. And then after college, studying marketing and sales, I jumped into the digital marketing world for small businesses and have been serving small businesses since 2013, growing their brands and playing a role in growth and strategy. And around 2021, I just had an itch to come into the Bitcoin industry. After learning about Bitcoin in 2017 and learning about the function of money and really digging into economics and just what was going on in the business world, it only made sense. So since then, I've joined Voltage. I'm the VP of Marketing and on the board of directors there at Voltage. And what we do is we serve mid-market businesses, helping them set up Bitcoin payments infrastructure, whether embedding it into exchanges, banks, wallets, apps, you name it. We're the go-to Bitcoin and Lightning Network payments tool. And just with the convergence of small business and Bitcoin, it's just attracted me to telling the story about the two and bringing it back to my childhood where I was first learning how to, when cash flow is coming into the business, learning how to allocate it. My father from a very young age just taught me, you need to have a game plan and a strategy. And what's really unfolded over the last 4 years with, Michael Saylor and others, they're really painting the picture of why this is important. And it's exciting to be here and talk to you about this, Joe, because I know that's your heart and mission and why you started Acropolis. So this is going to be a fun time working together through the pod.
Yeah, no question. Excited about that and love hearing about the background. So I'll jump into why New Foundations? Why does the world need another podcast? Up to this point, there really hasn't been a pod that focuses on the treasury management function of businesses and why the traditional approaches are failing. This doesn't matter if you're a mom and pop shop or if you're a large public enterprise. All of the options, the traditional means, are coming up short in terms of storing, preserving value of that hard-earned profits and retained earnings and creating shareholder value as well. So New Foundations is about building on healthy, strong foundations, which of course we're here to tell you this is Bitcoin. If you take a step back, if you can separate yourself from the day-to-day, week-to-week, month-to-month volatility, you understand that this is a verifiably scarce, digital, immutable asset that resides on a global neutral settlement layer. You benefit from short-term liquidity, the liquidity of a short-term investment, but you have the pairing with the upside value potential of a long-term investment. Not only that, but a disruptive technology. So when you marry these two, you realize that these new foundations are right there available to everyone. Most just haven't considered it. As opposed to make this first episode all about hammering out all the pros and the strengths of Bitcoin once you see it over the course of years, I think it makes more sense to explain why new foundations, why this podcast, by focusing a little more on the status quo. And I can break this down into two sections. So small business and medium-sized businesses is the first one, and the second would be enterprises. So you look at small businesses and the dilemma they face. The traditional fiat system has many burdens for them. And this is only going to be exacerbated as sovereign debt levels and as the monetary expansion continue to grow in an exponential fashion. Encourages us to no longer save capital. The dollar is eroding. It's this natural anxiety almost of holding cash in excess of what we need to spend day to day. But what happens? The stock market becomes a de facto savings account. It's very thoughtless. But what this does is it provides capital to these large public companies. Well, when these companies get this excess capital, their assets grow, and now they're more quote-unquote financeable. So now they have access to lower interest rates. And these economies of scale, this cycle just continues to feed on itself. You couple that with the fact that there's this lazy perception that the stock market just always goes up. And if you zoom out and if you look at it over a 50-year period, it's true, but it's not necessarily going up because of enhancements to productivity or value creation. The primary reason it's going up is the denominator is eroding. So if you look at stocks through the prism of the dollar, most folks are not asking themselves, well, what has the value of the dollar been over that time period? So your denominator is off, and this just adds even more fuel to this thoughtless investing into the stock market. This leads small and medium-sized businesses in this difficult position where they don't have access to that capital. It's not uncommon for small and medium-sized businesses to have no treasury strategy whatsoever and just sit in cash. Just as an example, if a small business sits in $5 million of cash for 1 year, you assume the money supply increased by 7%. That's $350,000 worth of purchasing power that was essentially stolen from that business. If their average salary is $70,000, that's 5 full-time resources, productivity that they would have had. If they have 50 employees, that's 10% of their workforce. These very significant numbers just by sitting in cash. And this all kind of happens slowly, quietly, and hidden from view. Another strategy for small and medium-sized businesses is they use sweep accounts. So if a company's sitting in $2 million of cash, they can set a threshold that anything above something like $500,000 would be swept into a money market fund. The last few years, they've gotten about 5% on this, which sounds not too bad. But after tax, this is 3.5%. And you're only halfway to that typical 7% expansion of the money supply every year. So you're slowing the drip, but you're not stopping the drip. And they're in this really tough spot where they're in this compressor. Their inputs and their costs continue to climb, but they can't just increase prices to match that because you have their customer base is feeling those same compresses in their daily life. So they can try to increase prices, but you can only do it so far without impacting your sales. And they're stuck. And before I touch on any, the dilemma that's different with the enterprises, Bobby, I'm curious if you have any reaction or additional color to add.
Yeah, I think the interesting thing is over the last, let's just say 10, 15 years, we've all been trained pretty religiously as far as what actions are necessary to keep a business sustaining and surviving. And one thing that's happened over, I'd say, the last 30 years is it's been very common, like you said, to maybe do money markets or stock buybacks, which we haven't gotten into, and I know you're going to touch on the enterprise section. But there's almost this very standard playbook, and whenever you shake the boat, if you will, it kind of might scare shareholders or stakeholders, the board of directors, whatever it may be. But the thing that's really happening is the extraneous variables that no one can control. So we're required to think a bit deeper and think, what can we do that's counter to the norm? And the interesting thing that I saw happen during COVID was a lot of businesses, they rely typically maybe on one or two common channels to drive their marketing and growth efforts. For some folks it may be paid, it could be event marketing, it could be SEO, and the companies that really relied on just one lens or one pathway to growth, they were the ones that really struggled, because whenever the economy just kind of paused and slowed down, they really were impacted, where organizations that took a holistic approach and have been thinking deeper about how can we approach these problems in a well-rounded way, they actually not only did well, they thrived and came out of it much stronger. And I think we're stepping out of just talking about like the sales and marketing that small businesses need to do to grow, and we're talking about money. And the financial world has been, like I said earlier, just a bit quite rigid, and now it's not as taboo to, I guess if you will, to talk about Bitcoin. And that's why I think what you're sharing and what this pod is going to reveal for people is going to be incredibly valuable, because the playbook has changed. There are companies actively doing this, and for larger institutions with larger sets of capital who want to sustain a business, past, being 20, 30, 50, 100 years old, they have to think sooner. And they want to have capital to invest in R&D or to acquire. And what we're really helping cover here with the small to mid-market is their goal is either to have like an exit, whether it be, going public or, offering profit share to their employees or being acquired by someone. So it's incredibly important for these companies to have a strategy as well. And I know we'll get a lot deeper into that, maybe later today and in some other episodes, but I'll pause there and allow you to dig into some of the enterprises.
You touched on a number of points that I was going to hit as well, which is when you look at enterprises, okay, you may think if the system has all these burdens on small and medium-sized businesses, well, then enterprises must be doing great because they benefit from this. Well, there's a lot of competition, so they have their own unique challenges. They're similarly pushed out of cash, as everyone is, because the incentive to save and to look at money as long-term oriented capital, this hasn't existed for decades now. If you haven't warmed yourself up to Bitcoin yet, which the vast majority of enterprises have not. So what has been typically the play? Well, for liquid assets to help cover their short-term needs, a significant portion of this has typically been held in U.S. Treasury bills or money market funds. Last few years, these been yielding somewhere around 5%, which is much higher than the previous decades. But post-tax, that's 3.5%. And we already went through how that's only 50% of the way there to the 7% monetary inflation every year, strictly when it comes to the money supply. And that 7%, that's not even the true cost of capital, which would be higher. We'd have to layer on risk and other factors as well. So what have they done? Well, they can't just put their treasury in the stock market, even though that's the kind of the thoughtless savings account of a lot of society, because there's regulations in place. Over 40% in securities of your assets, then you're deemed an investment company. You lose a lot of flexibility in terms of issuing debt or stock options. Also, if you're investing in an individual company and all they're doing to help create shareholder value is putting it in an S&P 500 fund, well, there's no point you can do that yourself. All you'd be doing is adding in a layer of risk for that particular equity. So what do? Commodities. Prior to Bitcoin, there really wasn't a good liquid option that was easy to store. And also with commodities, there's always an incentive to drive the price down by going out and finding more of it and producing more of it, until Bitcoin. Of course, with Bitcoin, no matter what the demand is, no matter how we could wake up tomorrow, the price is $500,000. Sure, that's an incentive for more people to mine, but that doesn't change the pace at which the supply is released. So there really wasn't a commodity option either. So what this led to is this dynamic where the standard was acquisitions, but even more commonly, share buybacks. And with acquisitions, it's the number one reason why previously successful businesses fail. And Harvard Business Review estimates 70 to 90% of acquisitions fail. mostly due to a poor alignment of strategy, poor cultural fit, unclear goals. On the share buyback side, this works great short term. It enriches the executives with their stock options, and the investors like it because share buybacks naturally lead to an increase in the price because there's less shares out available. However, you're hollowing out your business. You're stripping yourself of your financial capital. If you do this long enough, if you have no financial capital, well, then you have no volatility of your stock price. Really hard to retain employees with stock options that way. But even more importantly, you're not prepared for a series of 1 or 2 quarters of poor performance, let alone something like COVID comes up out of nowhere. So you're making your business more vulnerable with a short-sighted mindset of value appreciation for that stock price. The last point on that topic is that businesses will decide, well, hey, why don't we just take out cheap debt to buy back stock? This became very popular when we were in the low interest rate environment. Well, now you're levering up what were healthy businesses so that they're just becoming more vulnerable. It's this odd dynamic where if you just jump to that being the conclusion without understanding why you get there, it'd be kind of confusing. Like, why are these healthy businesses taking out this leverage? And it's because they really don't have other ways to create shareholder value in this whole game of this eroding denominator. And Bitcoin is a complete transformational paradigm shift of you're establishing long-term oriented capital. Michael Saylor termed the quote, "This is the corporate endowment." I'm going to hand it off to you here in a second, but Harvard and these other schools, they've done so well with their endowments because they think in terms of decades. So they've invested in venture capital, and they didn't need a quick return. Well, the corporate endowment is a complete flipping of that whole model that we just walked through. It's thinking in terms of decades. It's thinking in terms of scarcity, of having capital that respects the past work that you've already put in. So, Bobby, any thoughts there? Would also love to hear, how you got to your conviction to commit your career to Bitcoin and SMBs. And you could also touch on, 1 or 2 use cases for businesses with Bitcoin that may not be well known or talked about enough.
Yeah, I guess the thing that stood out to me about enterprises and how they handle their money was the story of IBM, how over the last 20 or so years they've done enough stock buybacks and they've lost value in their stock enough that they've done more in buybacks than their current market cap. And whenever I heard that story, that was kind of mind-blowing to me. And you just think, how could that happen? That they're a tech company. They could have invested in R&D or done something a little better. But regardless, of what they could have done, that's where they are. And I think that's the reality for most businesses. Every business doesn't live forever. I forget the time frame most businesses live, but many don't make it to 100 years. So if that's a reality, we have to respect that reality. And one thing my father always told me as a young boy is he said, Bobby, I've got to wake up every day and choose to love your mother and self-sacrifice for her because divorce rates are 50-60%, and I'm arrogant and ignorant to think I'm above the way of the world because we're in the world, so we have to be intentional every day. And I was like, Dad, you're right, so I think just to paint that picture for folks, whether it be our relationship or our business, we have to respect reality. Most businesses fail. There's all these extraneous variables you can't control, whether it be the marketplace, competition, or the fact that that the Fed's debasing our money, our government is printing money. So what do we do? Well, stock buybacks, you can do it. You can only do it so much in some cases. And if you're a tech company, like the, what do they call it, the Magnificent Seven or whatever, all the tech companies like Amazon, Facebook, and so on, you might be able to buy your stock back longer than others because you are, in some ways, the monopoly, if you will. But the average business can't do it. Most companies are zombie companies. They're not growing. And you touched on, folks buying money markets or, just putting money into the stock market. When you take out those Magnificent Seven, the stock market just follows the M2 money supply. And I won't dig into that because Lynn Alden and others have covered that really well. So if you want to have a competitive advantage, should you do what the average person does? That's something everyone should kind of ask themselves. Should I do what everyone else is doing? Make that decision. If you have a massive competitive edge like Facebook, Amazon, whatever, maybe that's okay because you've got a competitive advantage in another area. But I don't think most companies in the world, have the greatest social network or the greatest marketplace or logistics vertically integrated within their business stack. So you have to think a little outside the box. And that's why this is so valuable for these companies. And, you ask, why am I passionate about Bitcoin? Why did I decide to bring my career into it? Well, after doing marketing and sales for small businesses and growing businesses, since I was a child and spending the last 13 years doing that for SMBs, I thought, this Bitcoin thing's real. I've studied it for 4 years. I see its growth. I see its trajectory. I think I understand where the puck is going. So I want to bring my talents into the Bitcoin industry. And then after being in the Bitcoin industry for 3 years, I learned about acquisition entrepreneurship. And for those not familiar with acquisition entrepreneurship, like if you get into SMB Twitter and spend a few hours there, you'll quickly learn there's the silver tsunami. Boomers own tons of businesses. There's 10,000 boomers retiring a day, and 70% of those businesses end up not getting sold or acquired by a new business owner. So there's a race to acquire those businesses. And there's something called a search fund where a new entrepreneur would come out into the market and seek to buy one of these businesses. And those search funds, when private equity invests in them, the average return is 32%. So there's a huge demand to buy and acquire and invest in those companies. It outpaces a lot of what's happening in real estate and in public markets. When we talk about the CAGR of Bitcoin, looking back in time, depending on when you start measuring, the CAGR could be anywhere between 40%, 75%. Sometimes you hear more, but Bitcoin is the one asset that beats that. So I think for business owners who are established or Bitcoiners who want to come into business, both need one another. If you're a business that wants to have a stronger treasury, you need to consider Bitcoin and go through the learning process. If you have built a Bitcoin stack because you have held the better asset over the last 10 to 15 years, you can step out on the risk curve and take a chance acquiring a business, not just working a W-2 or maybe starting one from scratch and going slower. And I learned about all of this after working with small business, coming into Bitcoin, learning about acquisition entrepreneurship. And I just had this light bulb moment where I was like, oh my goodness, the two pathways of building wealth that are in most demand, working on Main Street or owning a small business or buying and acquiring and holding Bitcoin long term, those mutually serve each other. Because one thing we kind of talked about off the podcast, Joe, that I like to talk to Bitcoiners about specifically is, the reason you hold money is to buy a product or service. You don't want to just hold money forever and go to the grave with it. We all want to have a better form of life. And as a business owner, you're trying to offer a great product or service for cash, which is the language of how we exchange value, if you want to think of it in a simple way. We always trade a good or service for money. We're not trading chickens for apples or trading a house for a car. Money serves that role, and Bitcoin is the digital form of money that allows us to do that globally with instant settlement, and it happens to be a great store of value. So whenever that happened in my mind, I was just like, oh my goodness, this is incredible. I just, to myself, I wanted to help tell that story. I wanted to help others understand it. And what we've really seen over the last few years is more people are getting it, and people are putting that not only as like a personal decision as a part of their day-to-day life, they're bringing it into their businesses. MicroStrategy has done it, who's very well known. Michael Saylor at this point, who seems to be on mainstream news constantly. Metaplanet in Japan has done it, and there's other companies in America, they're not coming to mind, that are doing it. And that alone has been pretty impactful. And one thing I've done in the digital marketing business I own, my partner Alex Wells, he's the CEO. We've had a Bitcoin strategy for 2 years, and we hit a tough quarter. And by saving in Bitcoin, our holdings were up 275%, and we were able to sell off some Bitcoin to fund us getting through that tough time. And that was a real life testimony for me that really kind of affirmed that, because I got to live it and breathe it. And we just made a key effort of just taking excess cash flow, dollar cost averaging into Bitcoin, still funding the core business, growing the business. And when we hit a tough time, we were able to do it. Now, our long-term goal was to use that to, expand tremendously. That's obviously the, I think, goal for a lot of people is you want to expand, but the even better thing is to, not run out of cash so that you can last. And I forget Bill Gates, he used to say, I think early in his career, have have enough cash on hand so that you could go 2 years without a dollar coming in, something like that. And to be able to weather through something like that, thanks to Bitcoin and a higher quality of savings, that really transformed our business. So I think that's my thoughts on that. But as far as the one other point you had made and raised to me was, a Bitcoin related use case or opportunity business owners or operators, may not know or hear about often. I think what's really happening in the world right now, and the shift, I think a lot of people are seeing it, but they don't know how to do it, is there's personal branding and then leveraging a personal brand to build a Bitcoin strategy. And I think building a personal brand is challenging for a lot of people, because after me, being an entrepreneur, doing my day job 8 to 10 hours a day, the last thing I want to do is come home and market myself after marketing other people. It's pretty draining. It's challenging, And I think a lot of business owners feel the same way, because when I work with these CEOs and operators and I'm like, hey, I'd love for you to make content. And I'm telling them this in like 2014. I'm like, this is going to help, video is going to impact your business. You can tell your story, all this. And it's just like, man, that's a lot of work. And I'm like, all right, I hear you. You don't have to. But here we are today. The fastest growing segment in the small business world is content creator. So if you're a business owner, being a content creator is important. And I can't tell you how many referrals I've had come into our business, whether it be Voltage for Bitcoin or Imprint Digital, our digital marketing business for small businesses. My personal brand has helped do that. You and I meeting has come from my intentional effort on Twitter. So if you're a business owner listening to this, you've got to do that. And that's step one, telling your story, sharing your story, and letting the world know what you do, the value you create. Now the next piece, Bitcoiners, they tend to be critical thinkers. They tend to have a high value set. And if you can attract customers that have capital, that have money they want to spend, and they have higher values, it typically will lead to, and there's been presentations and podcasts about this, which we can maybe share in the notes, but it typically is a higher value client, there's a lower churn, and they have a higher lifetime value. So if you can not only build your personal brand, but tie Bitcoin into it and attract the customers that have Bitcoin, you often can build a competitive advantage. Because Bitcoiners, believe it or not, they are a very unique subset of customers that they hold on to their Bitcoin until they meet someone who they align with the same values, and then they want to spend it with that person. That's a common trend that we see increasing. Parker Lewis from Zappright has kind of touched on this in some of his content as well, and we're just seeing that to be true. So I think a lot of business owners, as they are discovering Bitcoin, maybe listening to this, really think about how you can tell your story, build your personal brand, start to integrate Bitcoin into it, and attract those customers who will have lower churn, typically a higher lifetime value, and will be a great part of your business. So that'd be the piece I'd share.
Yeah, to your last point, other than the benefit of fortifying your business by accumulating Bitcoin, it's a heck of a sweetener to throw in there that when you announce it, you're going to immediately gain thousands of followers on X and a bunch of loyal customers. If you just look at what happened with KC Cattle Company and other companies that have come out and embraced Bitcoin, there's no question that that's a heck of a bonus.
Yeah, no, it's interesting you say that. We haven't even brought this up, but every company on the publicly traded markets that have announced a Bitcoin strategy, their stock tends to pop. People talk about them. People want to support them. Like they intentionally look for them in the news because they want to express, hey, these people are doing it and it works. And there's enough Bitcoiners out there in the world where we're starting to represent a pretty strong amount of not only the voting base, but the I guess like discretionary money in the economy. I don't know the exact word, but I think people hearing this know what I mean, that now we're seeing Donald Trump make it a core part of his strategy. After he did that, the Biden administration started becoming a little more lax with what they were approving. It's now a political issue, and once there's these regulatory frameworks like FASB, being able to account for the price going up and down and not just penalizing companies over and over and over again for holding it. The world's changing, and it feels as though the world is embracing Bitcoin. So you're not super early anymore. You're not like the early adopter, and you're not a late adopter. So there's a ton of time left, and I think there's a great opportunity not only to use it on the Treasury, but to also make it a part of your strategy and tell a story, because the principles of Bitcoin, which I'm sure we'll dig into some other episodes, really can align with mission and value oriented companies that have high standards. And that's a great thing you can leverage for building a brand.
Yeah, you hit on something that I wasn't planning on bringing up, but there's this slight little nuance of a difference of MicroStrategy stepping in, being the first one, versus the more recent ones. With MicroStrategy's first purchase, they bought $250 million of Bitcoin, and they simultaneously bought $250 million worth of shares back as well. They didn't know how the market was going to react. If there were a lot of investors that hated the idea, they wanted, hey, I want my money back, I'm selling my shares, I'm not on board with this. Well, MicroStrategy buying back some of its shares would help them get out without too much of an impact to the price of the shares. They didn't need to at the end of the day, but they didn't know. They just weren't, it hadn't been done before yet, right? And then you fast forward to today, companies like Semler Scientific, they're stepping in with an announcement, and they didn't do a share buyback simultaneously. These companies have seen, okay, you buy Bitcoin, what's happened to the price immediately following? Now, that's obviously not a guarantee that there could be certain circumstances in the economy where that doesn't happen, but we haven't seen that yet. So I'm glad you touched on that point, because I've loved kind of the trajectory of the confidence of these companies stepping forward, announcing that they're using Bitcoin as a treasury asset. And on that point, I think it's a good time to mention, why Acropolis? Why did we launch this business recently? So there really, to this point, has not been a comprehensive treasury solution built for the Bitcoin age from the ground up, utilizing the unique properties of the protocol. There's a lot of different businesses that touch on certain aspects, but we're putting together the full picture. The product's going to have really three pillars that it's built on. It's custody, it's advisory, and it's ancillary services. On the custody side, a company called OnRamp pioneered multi-institution custody. What this idea does is it really makes corporate adoption of Bitcoin possible. Prior to that, you were left with two poor options on the business side. We've seen the failures and the issues with trusting one centralized custodian. During those bear markets and when the price is coming down, it was almost a question of who's next, right? So corporations didn't want to trust just one entity. The flip side to that was self-custody, which is very popular amongst individuals. For businesses, there's a lot of friction involved with self-custody. Some simply just can't from a regulations and an audit standpoint. But the ones that can, like a small business, medium-sized business, you have to decide, where are we going to store the hardware? Where are we going to store the backup phrases? Who has access? How do we successfully manage business continuity when you think about certain members of the team are going to leave and we're going to have to hire new people? There's a lot of friction there that would stop businesses in their tracks from adopting. What multi-institution custody allows is you leverage what's called multi-sig with Bitcoin. You can have three keys, and two of the three keys are needed in order to move the Bitcoin to sign off on a transaction. And those three keys can be distributed amongst three separate custodians, three separate holders of the key. And what this allows is you never give up unilateral control of your Bitcoin. So you're trying to combine the best of both. You're trying to combine the best of self-custody with the best of not having to hold your own keys. And the end result is multi-institution custody. So this really opens the door for more corporate adoption. You look at the advisory side. So very early on in conceptualizing this business, I tried to take a step back and I asked, how can I apply scarcity to this business? What's going to be scarce the next 3 to 5 years? And sadly, the first thing I came up with was common sense. Secondly, it was cheap oil. And third, it's Bitcoin strategy officers. So this role of Bitcoin strategy officer is going to become increasingly more important. But there's a significant shortage of hireable talent for enterprises. And for small and medium-sized businesses, they're likely not in a position where they want to commit a full-time resource to helping with a Bitcoin strategy. This is where Acropolis can come in. Really, it takes potentially thousands of hours for a business that's new to Bitcoin to go through the entire evaluation process and get to a point where they have the conviction to take their first step in. What Acropolis can do is we can help you cut that down to a matter of days, depending on the circumstances. We help ask the right probing questions that help get you to what's the appropriate accumulation strategy, given my particular cash flow, given my particular capital position, etc. And lastly, the ancillary services. This is a really exciting area. So there's some obvious areas like integrating with the best payments infrastructure in the industry that's already out there and proven. Allowing for cross-border payments, right? Bitcoin is borderless. Tapping into that, payments 5, 10, 20 years from now are going to look extremely different than what we've been used to. On the payroll side, you can incentivize your employees by taking a piece of their salary in Bitcoin if they so choose. And then there's some really creative ways you can do a company match of the Bitcoin as opposed to matching a 401k. And and then it can get even more creative. You can put a vesting schedule on the match to try to incentivize your top talent to stick around. Shout out to Michael, who's been having a lot of fun and excitement noodling on all the Bitcoin benefits potentials and around the idea of vesting and locking Bitcoin. But the list of ancillary services is endless. When you think about escrow and Bitcoin's unique settlement properties, when you think of AP and AR, Bobby, this is something I've seen you post on X about. It's about the idea of paying or receiving bills in real time as value is being transferred. It's endless the way that Bitcoin is going to transform the Treasury function. And Acropolis is pulling together the first comprehensive unified platform to really help you thrive in this new era. Bobby, I'm going to throw it over to you because I just referenced something that you've talked about. I'm sure you have several thoughts there as it pertains to ancillary services and just the Acropolis product in general.
Yeah. I think the interesting thing about Bitcoin is it's programmable, and you brought up paying for things in real time, and while a lot of this has been built in the last 2 years and is fairly niche, like there's the ability to listen to music and only pay for what you listen to and stream it. And I happen to make music in the value for value space, and I'll be at Bitcoin 2024. If you listen to this podcast and you want to dive into Bitcoin content deeper, I'll be actually running a panel for value musicians. And why this is cool is rather than paying Spotify $13.15 a month, you only pay for a micro amount for each bit you listen to, or you can tip content creators directly. And I have a few songs on Spotify, and I've made more on these decentralized platforms than I have Spotify. And this ability to pay for what you use is becoming more common in the Bitcoin space, and it's going to be coming to business. And I think the more notable thing that's worth mentioning is 50% of small business payments go unpaid, and the amount of human capital that we spend chasing down these invoices is just tremendous. It costs trillions of dollars in the economy every year. And anyone who runs a business at scale, once you're big enough, you start to experience what chargebacks are, where you've got a contract signed, you've got phone call recordings, you've got texts, you've got Zoom meetings recorded, everything. You submit it to Visa, and they're like, sorry, we're giving the customer their funds back. And you're just like, you've got to be kidding me. And the fact that Bitcoin payments eliminates chargeback risk is an incredible thing for business owners. And I think every business owner, they have a certain type of customer that they would deem higher risk. And to be able to extend a different payment method to those people is powerful. Typically we would request Amex from those customers because we'd win 96% of those chargebacks, where Visa, we might only win 60%. So it just eliminates a lot of this kind of jumping through hoops and just games you have to play just to, run a sustainable business. And I think bringing that to the world's powerful, because a lot of times too, let's even talk about the positive spin. Not everyone's trying to charge back or not pay you. They're unpaid because they may not have the cash flows, right? And when you think about how an economy works, all these vendors paying each other, they all might be charging, net 30, or, they're waiting for cash to come in to pay a bill. And then that person, when they have the money, now they can pay you. And it's this waterfall effect. Imagine if every business had the capability to just pay in real time for services, money would flow faster through the economy, and it would just enable greater GDP growth. And while it's not fully capable right now, the technology is functioning in internet use cases. And over time, it will be coming to just, the brick and mortar businesses down the road. So it's fascinating that Bitcoin is programmable. And, step one is store value. Next is medium of exchange. And as we do get to the point where money can flow as freely as information does on the internet, it's going to bring tremendous benefit to businesses. And I think that's pretty stellar.
It's amazing. I think that's a good point to wrap up episode 1 on, unless you have some last thoughts or considerations.
No, yeah, I think last thoughts. If we've inspired some thought in you guys, whether you want to, personally learn more about Acropolis and speak with Joe, or just talk to us, please do reach out. We love meeting folks on this journey and just helping them accelerate understanding Bitcoin. So say hello, reach out, and once it's live, rate it, leave a review. If this was valuable, this is going to help other business owners, find this content. So we appreciate you guys tuning in.
Appreciate that, Bobby. Yeah, already looking forward to Up 2. We'll have to have Mason on with us. He's co-founder of Acropolis. And please reach out. Acropolis will be in Nashville at the Bitcoin conference. We're not just looking for casual meetups, which are great too and welcome, but we're looking to book meetings as well. If you think for your business that this product sounds interesting, or if you think that you can collaborate with us, reach out. I think that does it for episode 1 of New Foundations. Thanks for listening to this week's episode of the show. A quick reminder that New Foundations is for informational and entertainment purposes, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.